This is Optimal Finance Daily, episode 912, When is the Best Time to Retire? By David Warren with MoneyMiniBlog.com. And I am Dan, I'm your host here, each weekday reading to you from some of the best personal finance blogs on the planet. And if you've got ideas for us, we love to hear those. Please share your topic request ideas at oldpodcast.com. That's oldpodcast.com. And before we get to it, I want to thank Fundrise for their support. Fundrise enables you to instantly access high-quality, high-potential private market real estate projects, from high-rises in D.C. to multifamily apartments in L.A. And each real estate project is carefully vetted and actively managed by Fundrise's team of real estate pros. Fundrise is the future of real estate investing, so visit fundrise.com/OFD. That's fundrise.com/OFD to have your first 3 months of fees waived. For now, let's get right to the post as we start optimizing your life. When is the Best Time to Retire? By David Warren of MoneyMiniBlog.com. Many people dream of retiring early at 50 and spending their lives living the dream. Traveling, charity work, more time for family and hobbies, those are just a few things on their list of things that they long for in retirement. The reality is that more people than ever before can't afford retirement. The average retirement age in the United States is 63. Experts state the age of retirement is rising both in the U.S. and around the world. The main reason is the cost of living longer, experts state. Ari Kaptein, an economics professor, in an interview with radio station WBUR in Boston said, quote, "Definitely every country in the developed world. And the reason is the same as in the U.S. People are getting healthier. They live longer. Therefore, they need to be supported for a longer period, and at some point, that just becomes unsustainable." End quote. The fact is, most people don't have enough retirement savings. A Government Accountability Office study in 2015 found Americans between 55 and 64 have, on average, saved $104,000 for retirement. That only amounts to $310 a month for those who invested in a lifetime annuity. You also must consider the cost of living longer. There are more doctor's appointments, more ambulance calls, more tests, more prescription drugs, and possibly in-home nursing care, physical therapy, occupational therapy, memory care, and long-term care that can all play a role in you maintaining your health. How much should you save? It really depends on your age. Those in their 30s should have a retirement savings equivalent to a year's salary, while 40-somethings should have 3 times their annual salary saved. Those in their 50s need 4 times their annual salary saved, while those turning 60 should have saved 6 times their annual salary. What else can you do? Saving is only one aspect of preparing for retirement. Saving alone isn't going to ensure that you have all you need to live on for the rest of your life. Your money needs to grow during decades while you are working and continue to make money after you retire. You need to invest. Investment experts will all tell you 2 things. You need a diversified investment portfolio, and the older you are, the more conservative your investments should be. The exact percentages of stocks to conservative investments have changed in recent years. The old formula was to subtract your age from 100, and the answer is the percentage of stocks you should own. Now, with people living longer and sometimes past 100, the new formula uses either 110 or 120 as the starting number. Most investment advisors tell clients to be really aggressive in your stock investments in your 20s and 30s and start to move money into safer investments beginning in your 40s. By the time you retire, less than 20% should be in stocks or other aggressive investments. What other investments are there? There are many more ways to invest other than stocks. All carry a certain amount of risk and all have their advantages and disadvantages. The first step to widen your investment options is to have a self-directed IRA. This option allows you to include a variety of investments not found in a typical IRA, such as real estate, precious metals, and cryptocurrencies. Choosing this option means you will need to do research to find the best investments for you, rather than depending solely on the broker. For example, if you're interested in adding precious metals to your retirement account, make sure to check the ratings of gold IRA companies to learn how they compare amongst the rest of the pack. Additionally, it's important to read customer reviews to find out more about their experience and if the company is a right fit for you. What should be in a diversified portfolio? A diversified portfolio is a must because it helps protect you against investment losses. A diversified retirement portfolio can include stocks, mutual funds, treasury securities, real estate, precious metals, and cryptocurrencies. 1. Stocks. Some of the best stock investments are in industries you already work in or know something about. Having knowledge of an industry can help you pick stocks that others may not be aware of yet. Blue-chip companies are safe investments and are likely to withstand the changing financial tides of the future. 2. Mutual funds. Mutual funds are a collection of stock securities that are pooled together and managed by a professional. It collects money from various investors to buy the securities. The category can include money market funds, stock funds, bond funds, or hybrid funds. 3. Treasury securities. The U.S. government backs treasury securities. It basically allows the government to use your money to finance government spending with you being repaid at a higher rate of return. They are among some of the safest investments, but they also don't pay much in interest. They are liquid assets and, at the very least, they don't lose value. Treasury bills can mature in as little as 4 weeks, while Treasury notes take 2 to 10 years to mature. Treasury bonds are a long-range investment, maturing in 20 to 30 years. There is also Treasury inflation-protected securities, or TIPS, where interest is accumulated according to inflation rates. They mature in 5, 10, and 30 years. 4. Real estate. Real estate is also considered a safe investment. Buying a home is the best real estate investment because you can enjoy it as it builds equity. Some have found steady income in rental property, both residential and commercial, but that comes with the added responsibilities of finding good renters, collecting rent, and maintaining the property. 5. Precious metals. Precious metals like gold and silver are considered great long-term investments. Values rise well over 20 years, but can rise and fall in the short term. Even so, precious metals don't lose value below what you initially paid for them as long as you keep them for several years. 6. Cryptocurrencies. Bitcoin is the newest form of investing. People are looking at Bitcoin because it has dramatically risen in value in the past 7 years. However, financial experts are not convinced it is a stable investment, and they predict the cryptocurrency bubble will eventually collapse. Cryptocurrency experts disagree, stating Bitcoin will rise to $20,000 a coin. Final words. Preparing for retirement is a highly personal matter. A lot of the plans you make today depend on how you want to live in retirement. Looking at all your options will give you the answers you need to make the right decisions. You just listened to the post titled, "When is the Best Time to Retire?" by David Warren with MoneyMiniBlog.com. And thank you again to Fundrise for their support. Come by fundrise.com/OFD to have your first 3 months free. Private market real estate has historically provided excellent ongoing cash flow, even as it supports long-term growth. Private market assets like these are a strategy for diversifying beyond public market investments and even other kinds of real estate, like publicly traded REITs. And Fundrise is the future of real estate investing. The platform's innovations power an investor-first model by eliminating the bloated costs and middlemen that have traditionally weighed down real estate investing, saving investors time and money. That's why it's frequently mentioned as a recommended tool in the blogs that I narrate right here. Unparalleled transparency and real-time reporting let you see how the development of specific properties impact your overall portfolio. Check it out. Visit fundrise.com/OFD. That's fundrise.com/OFD to have your first 3 months of fees waived. And that's it for today. Hope you enjoyed our post from David Warren. Thanks so much for listening all the way through, and have a great rest of your day. I'm going to see you right back here tomorrow, where your optimal life awaits.